everyone, welcome to another episode of the Mizuho Week Ahead. I am Zinyi, market economist at Mizuho Bank. The theme for the upcoming week is swaying bets. Last week was characterized by swaying bets. The US presidential debate swung odds towards Kamala Harris, albeit the US election still looking to be a close call. As for the economy, rising core inflation on a month-on-month basis initially led to declines in wages on a 50 basis points cut by the Fed this week, but subsequently reversed declines and climbed higher later in the week, aided by reports that policymakers were contemplating between a 25 basis points or 50 basis points cut, as well as ex-New York Fed President Bill Dudley stating that there is a strong case for a 50 basis points cut. Fed funds futures are now pricing a 64% chance of a 50 basis points cut. In Europe, the ECB proceeded with the widely expected rate cut. Nonetheless, not satisfactory disinflation progress and slightly higher inflation projections led markets to pare back rate cuts bets in Q4, even as Eurozone growth forecasts for the next 3 years were downgraded. In Japan, while odds on a hike by BOJ were broadly unchanged, BOJ board member Nakagawa's comments that a rate hike remains a course if economic outlook is realized still aided the Japanese yen gains. Meanwhile, oil saw sharp swings, dipping below $70 per barrel as OPEC slashed demand outlook for the second time in 2 months, but paring losses on short-term supply shocks on adverse weather in Gulf of Mexico. This week, the long-awaited moment for the Fed to commence its easing cycle has come. The debate is not only about a 25 basis points or 50 basis points cut, but also on the longer-term policy trajectory as well. In particular, the FOMC is likely to convey a measured and controlled easing in the dot plot for 2025 towards a soft landing scenario, as aggressive cuts could incite recession fears. In contrast, the Bank of England is likely to stand pat, though the easing bias, given inflation's proximity to target, may restrain the pound gains, while quantitative tightening modifications imply caution for gilt bulls. Meanwhile, given recent Japanese yen gains, the BOJ is expected to exercise patience and keep rates unchanged while awaiting for more data to affirm their outlook. In EM Asia, Bank Indonesia is expected to hold on stable inflation, easing volatile food inflation, while retail sales remain supported. More importantly, BI is unlikely to be willing to incite unnecessary volatility on the rupiah ahead of FOMC. Nonetheless, Bank Indonesia is likely to reiterate room for rate cuts in Q4. In Taiwan, the CBC is set to prolong their rate hold, but could add hawkish communications amid little progress on inflation and escalating property prices, while economic growth remains robust. All in, the focus will be on the upcoming FOMC, and we can expect heightened volatility in FX and rates, especially as swing bets underscore the uncertainty on the size of cuts and as attention shifts towards 2025. With that, we have come to the end of the video. For more information on the key events for the upcoming week, please refer to our Week Ahead publication or contact your respective sales desk and RMs. And for regular notifications on our market views, please subscribe to our channel and hit the notification button. Thank you and bye-bye.